All right, end of October. Happy Halloween. Hope everyone had a great October. So, a few main stories to cover. The first is monthly mortgage rates. So, monthly mortgage rates hit 7%. This is the highest they've been in over 20 years. So, we'll have to monitor to see how they go. The Fed has announced that there's going to be further increases this year to curtail inflation. And we're kind of seeing this on the street. We're seeing the buyers get a little bit more aggressive with their terms. They're getting a little bit more aggressive with their inspection item requests and a little bit more aggressive with their purchase prices. Home prices have fallen for the third straight month overall. So, kind of seeing the effects of that in the marketplace. We're seeing monthly payments jump up, and obviously they're a lot higher than 3 or 4% mortgage rate. They're at 7% now, almost double that. So, by contrast, we're seeing aggressive offers in the marketplace. And the reason that is we're seeing low inventory rate. There's still 25% of offers are going over the asking price. And we're seeing that because of low inventory and high demand. Now you have to ask yourself, why is inventory so low despite all these mortgage rates going up, despite when sellers want to put their house on the market and not lose this opportunity? Well, it's a great opportunity for a lot of sellers, but also there's the majority of sellers too that are in a very good spot right now. And we call this the golden handcuff phenomenon. We're seeing sellers that had a 2, 3, 4% interest rate see the market now with a 7% interest rate, and they kind of get stuck. They don't want to really double their monthly payment on a house. And we're also seeing sellers with a huge amount of equity over the past couple of years. So they're in a very favorable spot. They're in a very flexible spot. So we're seeing inventory decrease. And just to compare this with the 2008 crash, there's 4 times as much inventory on the market in 2008 than today. So long story short, sellers are still in a good spot. We'll have to monitor how this changes. And the inventory is still very low, which is what we didn't expect. We expected more inventory around this time. Now, the last thing is rental prices have dissipated. Last month, they continued to dissipate. And we're seeing a lot of renters either roommate together, either stay with family and friends, and kind of wait until that market cools off a little bit. So this will be interesting to monitor as well as we see what interest rates do, because a lot of times interest rates relate to rental prices. If their interest rate is super high, people would rather prefer to rent than buy, and vice versa. So let me know if you have any questions. Now, a lot of this data may not pertain to your marketplace. We're seeing some markets where the inventory is absolutely flooded and some markets where the inventory is contracted, like the data shows. So it really depends on your individual situation. So feel free to reach out. I'm happy to make an individual video for you. I'm happy to consult with you if you want to schedule a phone call. But just let me know if you have any questions on this. We're in an interesting time here, so I'm here to answer your questions. So have a great day. Happy Halloween, and we'll talk soon.